The current trading plan that I use is almost entirely based on this concept, and I got funded using it. And other students have been using this concept very successfully. I'm talking about candle signs. So in the fourth video, we are going to touch on order flow and how it leads to candle signs. In the first thing that we need to go over right here, we are going to revisit the order flow lag. So in the previous video, we talked about order flow more in depth, that it has all three PD rays, so that swing point, that fair value gap. If there's no fair value gap, again, then it's no order flow lag. So it all comes down to understanding that fair value gap. And that fair value gap right there, that leads then to an order flow lag. And that leads then to us knowing the intention of price. So where price wants to go. Does it want to continue higher or continue lower? Let's dive into a few examples that we had of the previous video. Here we are on one of the examples that we had in the previous video on US dollar, Canadian dollar. And again, we are looking at daily time frame order flow lags. That is quite important to understand. Then here, we were looking to target these swing highs. So this one and that swing high right there. Why? Because order flow told us that. We had a bearish order flow lag right here, which told us an intention right there through that fair value gap that we might want to continue lower. This order flow lag right there had a sting into the fair value gap, failed to create a new order flow lag lower right there, and afterwards created a new bullish order flow lag, telling us that we actually might want to continue higher instead by just simply following those order flow lags. Then on Nasdaq as well, the daily time frame, we did the exact same thing. So focus here how the lows of those order flow lags right here do not get traded back into, do not get traded below. So we are constantly respecting the order flow lags going higher until the moment comes right here when we again fail to continue higher off of this fair value gap, off of that order flow lag, and instead we create a bearish order flow lag sitting right there. Now please follow along with these two examples or on your own chart. Mark out daily order flow lag, so on the daily time frame, and then that leads to candle signs. Because right here, order flow to candle signs. If we look at the daily time frame, then that daily order flow lag is also one singular candle on a different time frame. Meaning, here we have again daily time frame, an order flow lag, a bearish order flow lag sitting right there. That bearish order flow lag on the daily time frame is indeed an order flow lag. But what happens if we now go up in time frames? Then it turns into candle signs, where we only focus on one singular candle. But the one singular candle that we focus on is actually order flow. It is just through the lens of one singular candle, but we're looking at multiple order flow lags. For example, focusing on this order flow lag right here. On the daily time frame, if we now go up in time frames and we go to the weekly time frame, then this order flow lag right here turns into one singular candle, yes, but that one singular candle actually tells us a lot about what the next candle wants to do. Now, why do we even do this and why is this even important in the first place? It's because of the following. The less candles we focus on, the more our accuracy increases. Think of it like this. When we look at daily order flow, we maybe need to focus on predicting the next 5 candles. When we have daily order flow as our baseline, we go down below that into 1 hour or 4 hour market structure. Then we need to predict even more candles, which makes it harder to predict, for example, 10 candles very accurately. But if we go up from market structure back to daily order flow to then into monthly candle signs, for example, we only have to predict one singular candle, and that is the next candle. And if we know what the next candle wants to do on a monthly time frame, then we know what the next 22 daily candles want to do. So it becomes a lot easier and our accuracy increases a lot. And this is again all based on that order flow, because we're simply looking at order flow from a different time frame perspective. I promise you it will make a lot of sense. Now, before we dive back into the chart, we need to go over the 2 things that make candle signs. Candle signs is again seeing what happened in the previous candle, and based on that we can know what the next candle wants to do. Now that is going to be determined by 2 candles, and the first candle is a disrespect candle. So one-sided order flow lags, only bullish or only bearish order flow lags. So only going higher or only going lower. One-sided order flow lags on a daily time frame, for example, creates a weekly or a monthly disrespect candle. Then number 2 is when we have a respect candle. So again, on the monthly, it might be respect candle. What happens with daily time frame order flow? So inside that singular candle, well, we have order flow lags on both sides. So both bullish and bearish order flow lags. Now let's give you some examples. The first one is disrespect. If we have that for bullish order flow, so we have order flow lags going higher, again, for example, for the daily time frame. If you go up in time frame and it turns into bullish candle signs, that will look like an up candle and a small wick at the top, like we're seeing in this example. If this is a monthly time frame candle right there, then on the daily, we are seeing daily order flow lags holding and being bullish, so only towards higher prices. But on the other hand, when we create bearish order flow and we have order flow lags going lower again on the daily time frame, then that turns into, on the monthly, for example, as bearish candle signs. So a down candle with a small wick at the bottom, like we're seeing on the right side. Inside that candle, if we go into the lower time frame, we have bearish order flow. Now this tells us a lot about what the next candle wants to do, because we can continue in the direction of the disrespect candle. So if we have a bullish disrespect candle, like the first example, that means we can continue higher. And if we have a bearish disrespect candle, that means, like we're seeing, we can continue lower in the next candle. What can we continue lower towards? Well, towards those PD arrays again. So towards those swing points and fair value gaps, those targets that we had outlined in previous videos. At the end of the video, we'll go over a full top-down, how you can use this then on the monthly time frame in your analysis. But before we do that, let's dive into the chart what this then looks like. Because like we discussed, when we have this order flow lag right there and also this order flow lag right here on the daily time frame, we see that if we zoom out to the weekly, for example, those are bullish disrespect candles right there, like this one and this one. That means that we can continue higher towards a next target. Very similar to what we see right here afterwards when we start to create these bearish order flow lags right here. If we zoom out on the weekly again, then we see those are bearish disrespect candles, meaning that we can continue in the direction of the disrespect candles, we can continue lower. Then looking at previous price action, when we had all these bullish order flow lags sitting right here, what happened if we now zoom out to the monthly time frame? Well, in the monthly time frame, we get this huge up candle. And again, that disrespect candle, that means that the next candle can also be a bullish candle. So the next candle can continue higher, at least towards the next target. And inside this monthly candle, if we go down into the weekly and we now pay attention to just the singular candles, we see that all these up candles right here are pointing towards something. They're pointing towards these swing highs towards the left. We constantly have disrespect bullish candles right there, which constantly means that we can look to continue higher because order flow inside those candles, if we go down time frames, is bullish. If we do the same for the daily right here, we see that it turns into order flow, yes. But even here, if we look at these candles and we dive into those candles, then on the 4 hour, what does that turn into? Again, order flow right there. Now, this goes on and on and on because candle signs can not only be used then on the highest time frames, but also by predicting the next 4 hour or 1 hour candle. So imagine you're a scalper and you know what the next 1 hour candle wants to do. You can be so efficient on the 1 minute time frame. Now, let's save that for later on because that's something we will dive into later on in this series. So we understand the disrespect candle. It's quite straightforward in my opinion. This is what, again, disrespect order flow looks like right here. On the daily time frame, might be bearish order flow lag right there. If you go up time frames, it turns into a disrespect candle continuing lower. Again, insert different time frames. So if we're talking about the 1 minute time frame, If you go up time frames, it turns into 15-minute candle signs. So you have 1 minute order flow, 15-minute candle signs. You have 15-minute order flow, you have 4-hour candle signs. It's a fractal understanding of the market, and that makes it sometimes a little bit confusing, but also extremely powerful when you do understand it. Now, from this respect, if we then move on to the next candle, the second candle, which is the respect candle. For a bullish example, if we create bullish order flow, we again create order flow lags on both sides. So not only one side, but on both sides. With a bullish respect candle, what happens on an order flow basis is that we first have order flow lags going lower to then order flow lags going higher. And that leads to order flow lags on both sides. And that leads to bullish candle signs. An up candle, a down candle does not really matter. It's not very significant as long as there's a long wick at the bottom, which looks something like the following right there. So what happens in that singular candle is order flow lags going lower first to then going higher. That creates the long wick at the bottom. Then for a bearish example, if we create a bearish respect candle, so that bearish order flow, we have order flow lags again on both sides of the market, but now first going higher to then going lower. So bearish candle signs, again, up candle, down candle, is not very significant as long as we have that long wick at the top, which looks something like this, where we first have bullish order flow lags going higher to then bearish order flow lags going lower, creates that long wick at the top. Now this means the following for the direction. We can continue in the direction of the respect candle. So if we have a long wick at the bottom right there, that means that we can continue higher. If we have a long wick at the top sitting right there, that means that we can continue lower. Now looking at Nasdaq right here, we can find the exact example where we had those disrespect candles on the left right there. We also have respect candles on the right. So to paint you this full picture, on the daily time frame right here, we have daily order flow lags. We have this candle right there. That is the beginning of the month July. So during, of course, every daily candle that is printing right here, we also create a monthly candle. Now with order flow lags going higher right there, and then afterwards order flow lags going lower, that then creates that bearish respect candle that we were talking about. Because it simply creates at least a short-term reversal that we have. So if we go up to the monthly time frame, it turns into this long wick at the top right there. The exact same can be said about US dollar Canadian dollar, where again, on the daily time frame, we had this order flow lag going lower right there, this order flow lag going higher. So order flow lags on both sides creates again a potential reversal. The month opens up right here. So during that month, we first went lower right there, then we continued higher. This on the daily is order flow lags, but on the higher time frame, on the monthly time frame, it turns into this wick that we see right there. And that tells us when this monthly candle closes in 1 day and 23 hours, that we can continue higher towards the next targets right there. Now, to show you how powerful this is, if we don't even look at the monthly time frame and we go into the daily time frame right here, and we combine the understanding that we mark out those daily time frame swing points and fair value gaps that we're moving towards. Because again, we're always moving towards a PD ray. It is our job to find out which PD ray is next. Then combining order flow and candle signs on the same time frame is extremely powerful. So let's see right here. We have this swing point that we just took. What do we see right here? This swing point is getting respected. Why? Because we have a wick at the bottom right there, and we are wicking that swing point. That means this creates a respect candle while simultaneously also creating a disrespect candle right there. Because what happens there on the lower time frame? Whilst we come below that low right there, we create first bearish order flow lags, but then all of a sudden bullish order flow lags at the same time. That means there is again a reversal happening right there on the lower time frame. That means from that discount array, that swing point, we can look to continue higher towards a next premium array. So we have this fair value gap sitting right here, and we also have this fair value area, an order flow lag. Then once we come into this fair value gap, we see that we are not wicking that fair value gap, but we are closing inside of that fair value gap, telling us we might want to continue higher towards a next premium array, which is the fair value area right there. So the next candle can be bullish. And the next candle is indeed bullish. Next candle is also bullish. But what does this bullish candle have in common with the previous candle that we saw below this swing point? Well, they are both wicking PD rays, which means we have respect candles at PD rays. That means we are respecting those PD rays. Because again, what happens here on the lower time frame, if we go down time frames, then on the 15-minute, we see, first of all, that we have bullish order flow lags coming into the fair value area. And afterwards, bearish order flow lags leaving the fair value area, which, if we go up in time frames into the daily time frame, turns into that wick that we have at the top right there. So that wick at the top signals to us that we have a potential reversal on the lower time frame. So what can next candle potentially do? Be a down candle. This down candle, what can it aim for? Well, if it's going lower right here, the only PD rate that we have at this moment in time is this swing low sitting right there. So price is most likely heading towards that swing low. Then here, once we reach this swing low, what do we see below this low? Well, we again have a long wick, which afterwards creates an up candle, which what is then a most likely target? This daily fair value gap right there. And then we can deliver into that daily fair value gap. Now, when you start studying this in your own chart, and please, for your own sake, do that because it's extremely powerful, you will start seeing how good candle science is in combination with order flow and other PD rates. But disclaimer, only the PD rates that we have mentioned in the MMC series. Otherwise, you're going to lose all your accuracy if you start combining it with random PD rates. Now, that respect through the lens of order flow is of course seen as the following, where on the daily time frame, or again, insert any time frame, bullish order flow lag, bearish order flow lag, which turns into that respect candle, the long wick at the top. And that is what we call candle science. Now, to give you one example of a top-down bias, so focusing on the direction of price action, what we can move towards next. We can use this as the following, but you can get extremely creative with this, and we'll touch on this fully in the last episode of the series. If you apply a different concept on a different time frame, that determines what type of trader you will be. For example, market structure on the monthly time frame for me is not that relevant. But if you are interested in knowing what the next month will do, what the next years will do, it could be very interesting. You could be a long-term trader. If you are a scalper or an intraday trader, you might want to know what the next 1 hour candle wants to do. So you're going to apply candle science to the 1 hour time frame in combination with order flow. And that way you can easily go into the 1 minute time frame. So again, there's no limit to this. You can get extremely creative with this. But for this example, to keep it simple, somewhat simple, we're going to go over the monthly and the weekly for candle science. Then for the daily, we are going to go over order flow. For the 1 hour and the 4 hour, we are going to touch on market structure. Now, this combination that we currently have is mainly focused on something like swing trader to a day trader. All right, I want to use the following example: Australian dollar, New Zealand dollar. We're going to start on the monthly time frame. And on the monthly time frame, I want to focus on candle science. But again, like we mentioned in the first video of the MMC series, is that price is always moving towards a PD ray. So that also applies to the monthly time frame. It's just, again, our job to find out which ray is next. So if we focus on those swing points and those fair value gaps, then the current swing points that I can see is this swing point right here. And we have this swing point as well. For the rest, we don't really have a close fair value gap that has not been traded into. It's mainly those swing points. Then which swing point on the monthly time frame are we more likely to move into based on candle science on the monthly time frame? Well, I believe this swing high right there. Why? Because we have a very aggressive bullish up candle, a bullish disrespect candle right there based on candle science. Okay, monthly checked off. Let's dive into the weekly. And if we go down to the weekly, we do the same thing. So I want to do the exact same thing again. I look at the left right here. And I see that we also have this fair value gap sitting right there. Now looking a little bit closer at price action, we can see that we also have this swing point sitting right there. Now I can mark out fair value gaps all the way down here, but I think the story is quite clear, right? Because when we look at the previous weekly candle that has been closed, what happened? We had a very long wick at the bottom right there, which very coincidentally also stings into this fair value gap right there. In other words, also a weekly order flow lag. And off of that, it creates a very long wick at the bottom. That means it's a respect candle. So we can continue in the direction of the respect. The respect is bullish because what happened on the lower time frame? We opened up, we continued lower with order flow lags, then we continued higher with order flow lags, creating a reversal off of this fair value gap, the previous order flow lag. So this next candle that we are currently creating, we can most likely at least trade into this swing point right there. And then afterwards into this weekly fair value gap potentially. Now that is candle science checked off for the weekly and the monthly time frame. Now let's dive into the daily time frame to see what order flow is telling us. On the daily time frame, the last order flow lag that we have is this one right here. It doesn't really tell us anything, as in currently we don't have a new order flow lag going higher just yet. But I would say again, if we do mix in a little bit of candle science again, that we do again support the idea of continuing higher towards that swing high. So order flow on the daily is not that clear at this moment in time, but we can again dive now into the 4 hour and the 1 hour. On 4 hour market structure, we see that we have this intermediate term high, this intermediate term low, intermediate term high, intermediate term low. Now this recent intermediate term low right there actually sweeps this low into what did we see on the weekly, a weekly fair value gap, which causes price to move higher above this intermediate term high right there. And on the 4 hour, to add on to that, we also have 4 hour order flow right here continuing higher. So this does again very much line up with the idea of targeting this high right here, and after that potentially the weekly fair value gap. Now the last layer of confirmation, the 1 hour. What do we have? Now looking at the 1 hour, we see again market structure lines up perfectly, but the most recent price action, and this is where it gets interesting because this is what we're going to build onto. Now we see that we have a recent order flow lag right here, which we can continue higher from towards that target. And that not only gives us a direction, but also something to trade from, which is the order flow lag. And that is what we're going to now build on in the coming videos. But before we do that, you will never truly understand a concept if you don't do a case study. The case study for this video is the following. Start doing a top-down, so the top-down bias that we have done as well, to get to your bias and see how it plays out over the coming days. Again, feel free to use the study notion, first link in the description. All right, perfect. Thank you.